Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Welcome to the wonderful Wednesday, the April 15th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Used to be tax day. Normally it's tax day. Still a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now we got all the indices in the red. The Dow down about 488 points. That's about 2% to the downside. S&P down a couple of percent. NASDAQ off 1. Russell off 4%. Semis down 3. New York Stock Exchange off about 3%, 2.5%. For the Wilshire, the trannies are down 2+. The NASDAQ Composite about 2. Spot volatility index is up nearly 9% right now, almost 10%. Trading out at 41.45. Gold's off $31. Silver down 64 cents at 4% to the downside. Light sweet crude is basically flat. Treasuries are up over 2 points, nearly 2.5 points as we speak right now. Leading the charge dollar-wise, the upside. Tesla is the dollar leader, up $22. Dexcom is up 14, Netflix 14, Amazon 14, Mercado Libre up 12. To the downside, AutoZone down nearly 3% or $30. Chipotle off 17, a little over 2%. Lending Tree off 18. Buckaroonies nearly 9%. Cabot Microelectronics up $16 or almost 13%. So plenty of things moving. We're going to go ahead and first, before I get to the questions that have come in through Tiger's Den or email, let's just take a quick little review of where we're at inside the market. Let me just simplify. It's always great if I can simplify things for you. And to simplify, we're going to go to our short-term time frame charts out here. That's going to be the 60-minute time frame. So to give you a feel for what's going on here, now in this 60-minute set of tools, we're just looking at our TD9 counts, our TD9 support and resistance levels. Always important to understand that. We know that when we have a valid 9 count says that the high occurs on bars 8, 9, or the bar following 9, whether it's to the upside or to the downside. And then those 9 counts will help us to establish breakout support, breakdown resistance. Resistance is going to be the green line. Support is going to be the red lines on my charts out here. Now, I want you to go focus first on the NQ. That is the dead center set of charts out here. If there's 3 charts, you've got the ES at the top, NQ in the center, and the Dow at the bottom. Now, I want you to see just how strong. No, we can all understand why the market topped last night, right? That's the easy peasy. For those of you that have listened to the show, you know, many times you probably get tired of me taking a look at the topping and bottoming signals out. No, I know you never get tired, but it always helps us to answer the question. First, you've got to understand where we at in that 9-count pattern. Secondly, where is support or resistance? Well, we can see that at about 4 o'clock on the 60-minute time frame yesterday afternoon, we had TD9 counts inside the ES and TD9 counts inside the NQ. Those, in essence, set up the highs out there. Outside the Dow Equity Futures contract, there was no such 9 count, but we can see that in the bar As we went into the close, what price did was it found resistance right at that resistance line of 23,911. In fact, the actual close, let me see if I can get that for you here just for blanks and giggles, was 23,910. You got to love that. You tell me whether understanding support and resistance, it has got to be like numero uno, and you've got to be able to do it, in my opinion, in a way that is objective, not subjective. I don't want to have to try to explain to you what a swing point is or what a swing point isn't. We don't need to do that in this matter. In fact, this is what really turned me on to realizing that, swing points are really helpful in understanding retracements. They also tell us where a market turned, but it doesn't really tell us where support or resistance is. This tells us where support and resistance is. Wait, hey, take a look at the ES Mini and the Dow Equity Future. Let's go down to the very bottom panel out here on an hourly time frame. What we can see is there's a TD9 count that formed at the bottom. This took place at 11 o'clock. The actual count came in at 12 noon out here. So this is a valid. And more important than that, what price did was you got to the 9 count before you got down to a support level inside the YM. That was 23,078. That's always very bullish when you can get that 9 count before support. Or it's bearish, just the opposite. You get that 9 count before resistance out here. Now, last night we take a look at the ES&NQ. They were above resistance. Nonetheless, they still identified a top. Now, in the ES Mini, we've got the same thing out here. Now, 2782 was an old support level. It can act as resistance, so you'll watch that 2782 out here. But if this is a valid bottom out here, intraday bottom, we want to see price try to take out resistance. So inside the Dow, that's going to be a move up to 23,762. Inside the ES, that's going to be a move up to 2828. And we really don't have a move inside the NQ, or we don't have resistance, so to speak, right now, because that resistance would really be yesterday's high. So this is what the markets are doing. Now, what is it? What else can we take a look at to help us assess whether or not the market should continue to rally or bounce or move higher? Well, that becomes pretty easy. So we're just simplifying this stuff, just simplifying it. When we can simplify it, it makes it much easier for you to understand what the markets are doing. When you understand support and resistance, when you can objectively go to a chart for whatever time frame it is that you might want to trade, or you want to understand what's going on different time frames, which you always should want to understand what's going on in different time frames. It makes things very easy peasy for you to understand. The next easiest peasiest thing to take a look at is going to be what? Exactly. You're dead right. It's going to be that spot volatility index. So let's go take a look at it. Stevie's got to find it. I know it's here somewhere. There we go. VIX symbols. Makes a lot of sense. Now, where is that spot volatility index? That is going to be the bottom left-hand panel trading in relationship to the 50-day exponential moving average. That blue line is the 50-day exponential moving average. If you look at my data box, it's real easy to see. It says 4301. So 4301. What's the actual high that we've seen today? 4323. Where are we trading right now? 4129. As long as price remains, so what you've gotten so far today inside of the spot volatility index is you've gotten a test and rejection of a key level of, in this case here, resistance. And if that's the case, we have all of the scenarios, all of the information that we need to suggest that we should see a further counter trend rally, or at least a further rally today out there. So, Tarpon 2, does that help answer your question? Didn't even know that was your question that was in there. And it should have. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So if we take a look at this chart here, hopefully you're watching us on Tiger TV. This goes to answer the question that Tarpon 2 in the Den had, which was, I read his question further as we were going into the break, or after, as soon as we got in the break. And his question was, what would it take to get me to change my opinion that this is not a counter trend rally and that I would change to bullish? Now, I want you to understand that right now, you know, my signals are bullish, just so you understand, Tarpon 2. Out there, you know, if you take a look at my daily signals inside the newsletter for the S&P, it's bullish. But but that being said, what I know with certainty is this is a counter trend move, and we're going to go lower. We're going to go much, much lower. I cannot be any more of a Paul Revere riding through the streets of TFNN, and I'm doing this because I want you to be able to take advantage of this beautiful counter trend rally for your longer term accounts out there, or for whatever it is that you might want to do. But we're going lower. We are going to bust out the lows that we saw in March. The lows in March were what you can refer to as the coronavirus lows. The lows that we're going to be seeking. And I don't know if it'll be the second quarter or the third quarter or the fourth quarter, or maybe it's not going to be till 2025, or maybe it's not till 2032, or whenever it is out there. It really all depends on when we flip the switch, so to speak, on coming back into the market. But to answer your question specifically, Tarpon 2, this chart here for the Dow, the upper left, the S&P upper right, the NASDAQ, the lower left, the Russell 2000, the lower right, inside the Dow, which is the trophy horse for big money, for the international money, which is really key, because what we want inside the U.S. stock market out here is we want not just money from us, we want money from around the globe parking their tuchus right here in the good old U.S. of A. Right now, they're parking it in the U.S. dollar and they're parking it in treasuries out there. Those are kind of the safe havens out there. It's why I have suggested to folks, be careful on being short treasury bonds out there. But to answer the question inside the Dow, price would have to get above the trend line. The trend line that I'm looking at is the one from the 2016 bottom back in February of 2016. I then connect the low from December of 2018. And that's where price would need to get above inside of the Dow. That would then get the big capital, the large money, to say, okay, they've been able to push price higher without us. Now that they've been able to get through a key level of resistance, they'll go ahead and jump on board too. And what we know, what you and I know with certainty right now, is the big capital has not concentrated itself really anywhere. Now there's some. Let me try to find that page out here. Give me a second to pull this up. I just got to locate it. That's okay. Where is it? Where is it? Sorry about that, folks. It's usually pretty handy, but I've got a number of tabs. Here we go. No, that's not it either. Right here. There we go. So here we can take a look at really what's going on around the globe. This is the simple thing. Each of you can do this, because here what I've done to simplify it for you is I've just simply chosen the ETFs versus the indices for the different major countries out here. The upper left, you've got the Dow, which is up 26%. Off of the bottom out here, give or take. Inside the UK, though, they're up 22%. There is no real disparity there. Australia only 12%, Canada 29%, actually leading. So North America is kind of leading the charge here. India's up 22%. Germany's up 21%. So this is just this here, which we're seeing, which is no concentration of capital anywhere, really should be communicating to you and I that this is just a counter trend rally. If this were going to be something, this is a worldwide counter trend rally that is going on. That's all that it is. Working off some of that major, that coronavirus low. If that was the only thing we were dealing with, if we didn't shut down the U.S. economy, and we're going to see a fight like you have no idea out here about getting this economy open. And if we don't get this economy open, what does that say? What does that happen to us specifically and then around the globe? It says GDP. It says GDP goes into the tank. And folks, if you really go do the research yourself, you can do this yourself. Go take a look at GDP and understand how important that is and how it correlates to the stock market. And what you're going to find out there is every single major bottom in the stock market doesn't occur when we're dealing with an economic collapse like the one that we've got, and it's going to continue. We don't see a bottom until we see GDP bottom. And if you think that GDP bottomed in March, in the first quarter, well, you know that's impossible. You know that didn't take place out there. So, and that feeds into a question here from John. John in Sarasota, and John is saying, Steve, kind of like, hey, I'm interpreting John's question. His question specifically is, hi, Steve, what effect might the plunge protection team have on the market direction out here? And in essence, I believe John is asking the question, hey, don't fight the Fed. Isn't that really what you're asking, John? I would imagine, because that's the plunge protection team that you're talking about. And the cool thing is that you and I, we don't have to create opinions based upon what it is that we think out here. Instead, what we can do is we can go back and we can factually answer most questions that are out there. That's the beautiful thing about what it is that we do. Inside of the Dow, we can go back. I go back to, in the 1800s out here. But let's go try to answer John's question out here, because it is a valid question. It is the same question that I asked myself. So I figure I ask pretty good questions, or I try to ask pretty good questions. And how do we answer that? Well, it was really to go back and say, hey, you know what? Although we have a small sample size of QEs, at least we have a sample size of QEs. We've got QE1, QE1 plus, QE2, QE3, QE4. We got Operation Twist. We've got several things that we can look at. So the belief that the Fed, has just simply got more firepower and they can hold up the markets out here, it's BS. It is before Steve showed you the following. We know exactly when QE1 took place. That was on November 25th, 2008. When did the Dow actually form a bottom? March 18th, 2009. 68 trading sessions. Divide 68 by 5. That's how many weeks you're dealing with before it. Hey, John, in Sarasota, where was the plunge protection team back then? In fact, just to kind of cement that bottom, they went to QE1 plus, where they just simply extended and expanded quantitative easing. Let's go take a look at QE2. QE2 has had the best result with regard to the shortest time period. But even from the announcement of QE2, it was just simply a big push to the upside. And then guess what? It was 3 weeks later before the Dow found a bottom. Let's now focus on Operation Twist out here. QE3, 9/13/2012, John. When did the Dow actually bottom? 44 trading sessions later. You see, the plunge protection team, or the Fed, is not going to control what the market is going to do. It's going to do the best that it can, but it doesn't mean just simply because quantitative easing was announced or had been announced previously that meant the market went higher. Take a look at here, QE4 right now. Take a look at how the Dow is responding. QE4, we get that announcement on April 9th. April 9th has been the high so far. We didn't take out the high yesterday. We tested the high, but didn't take it out. So, John, your question with regard to, do we have to make our decisions because of this plunge protection team that we don't know whether it is or it isn't working out there, or because of Fed juice, so to speak? No, we have the information at our hands. Now, Alec, I tell you, don't be a prisoner of the past, be a pioneer of the future, but learn from the past. Realize what happens on stock charts from the past, because oftentimes they do tell you what's going to happen in the future. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranked me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing up positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is off 488, S&P down 63. So one of our questions inside the Tiger's Den is to take a look at Roku. Roku today is really confirming an A to B equals CD to the upside. The swing point that we're dealing with out here was March 24th. That had volume of 17 million shares. We're already at about 11 million shares with 4 hours of trading. So, you know, if you divide 11 by 4 times 6.5, I can't do that completely off the top of my head, but, you know, it should get us above that 17 million mark. And if that's the case, then you've got a 1-to-1 A to B equals CD with a price projection of 122.94. Now, 123.31, you get to the center of its weekly profile. It's a bearish structured box because the center is closer to the top than it is to the bottom. So that 123. 31, 122.94 looks to me like the next level. Above that, we'd be looking at 127.94, 141, 134. But just simply with regard to Roku, right now, it's got a price target, I would say, in the 123-ish type area out there. So I hope that if there's anything to worry about, let me just pull over my other charts. Let me just on the daily time frame, because I noticed it out of the right corner of my eye. If there's anything to be concerned about, wow, where'd that price go? Oh, what did I do here? Very interesting. Let me try to get this indicator open. It's at this level right here. It's a trading high of March 2nd, but I must have changed where to place the values. And I must have placed them on the right-hand side. So give me a moment here, if you would. I just have to find that box, and it says, oh man, where does it let me do that? Huh? Oh, I've got to get to the right thing out here. Price markers, display data box. Oh boy. Okay, I'll tell you what, I'll just simply have to come back to it. So here for Roku, it was the high that you want to pay attention to, because today's going to be bar number 7. It's going to be 116.16 out there. And if you get a 9 count prior to that, you could see some type of a pullback. So ideally what you're looking for is over the course of the next couple of days out there, especially because of this A to B equals CD to the upside, is you really want to see it close above the March 2nd high, and that again is 116.16 out there. So, and I'll fix that. I'll fix that during the break. I don't need to do that. Spend 6 minutes here while you guys are watching me try to find the little checkbox or whatever it is that I've got to change those levels so that they show on top or below the bottom of the bar out there. John had asked me a question earlier inside the Tiger's Den, and it was something about the S&P 500. And let me see if I can find that here. But I think it went like this. Care to share with us this guess? What are the odds that this was a top? 100%, 50% other? Thanks. No clue. Great. Thanks for reposting that there, John. So with regard to the S&P specifically, let's pull this chart over. Here's what we know about the S&P 500 right now. We know that if the gap from this morning does not get filled, that means that we don't see price hit the low of yesterday. If we don't see the low of yesterday getting hit, then the price probably wants to continue to move higher, John. Now, move higher to where? Maybe it just wants to fulfill that 1-to-1 A to B equals CD to the upside of 28.97. But I can, in my mind, the A to B equals CD pattern, these price projection levels that I give you, they're just guidelines. It's not like we want to use the number that I give you as an exact tick or something like that. So the question becomes, during this A to B equals CD that we have drawn in on my screen out here, is that close enough to the 1-to-1 area, I mean in yesterday's side, is that close enough to confirm a Gartley sell pattern? And the answer that I will say is the answer is yes. So as long as we have this gap to the downside, that's your bearish reversal candle to confirm your Gartley sell pattern. Now, what we don't know is how far will price be able to push down. Right now, in looking at this chart, because we don't have any new profiles yet inside the ES Mini, but in the S&P 500, that's the chart that we have up on the screen. I don't have the future contract. This would say that price would push its way down to the 25.98 level. It's when price would break Stevie's red line, especially if it still remains red, which likely it will. That's what then says, okay, we go back and we test the March lows. I say we will eventually bust out those lows out here. But if you're asking me, is there a topping, is there a valid topping pattern in place right now? The answer is absolutely. And prices below Stevie's red line. That's the stair step. That is the weekly oscillator unchanged line. The small, the more natural looking red line at 25.98 is for the daily time frame out there. Ideally, what we would get, John, to really answer our question, is that any kind of top of significance, we really need to see support being busted. And unfortunately, right now, we don't have any new profiles for the ES Mini or for the NASDAQ. We do. It is trying to form for the Dow. And that's nice because if, in fact, in the Dow here, the Dow Equity Futures contract, and look, I don't have a guarantee that this profile is going to hold. I can tell you I'm using my advanced set of tools out here to help us understand from a profile standpoint where are sellers and buyers trying to line up. I'll have a better feel tonight if, in fact, this profile will last through the when the market opens back up at 6 o'clock this evening. If it does, then 23,967 is resistance. That's what price hit today. Support is going to be 22,676. Now, why is that important? Well, if I just bring over the Dow itself, so forget about the Dow Equity Future contract for a moment. If we bring this over, although we are well short of the A to B equals CD pattern here, we got up to about the 24,000 level, and 25,116 is the 1-to-1 A to B equals CD out here. But this gap to the downside today, is that confirming the Gartley sell pattern? It may be. No, I'm really being liberal here on calling that. But the Dow has given us a topping signal as well, John. And the real confirmation, it would be a close below the 22,676 level. If price can bust out support, and on the Dow right now, we believe that's 22,676. Inside the Russell 2000, we talked about this a couple days ago or yesterday. This already gave us our Gartley sell pattern, so that's done. Now, in the case of the Russell 2000, its new profile, the low is 1100.47. So if price were to close below that, that would then confirm what it is that I've been sharing with you, and that price should go back and then at least test the lows, I would say beyond the lows out here. What we don't have, which would be really nice, is new market profiles for the ES and the NQ out there. And that would really be helpful because when we have topping signals, all that sellers really have the right to do is push price down to support. When they bust through support, much like when we were taking a look at the 60-minute time frame, boy, that's when they tell us something until some other type of bottoming signal might form. Could be a TD9 count, could be Rhodes Momentum Indicator, could be wave number 7. A couple different types of patterns that are out there. So do we have any type of indication of a top? We do. The other thing that must go with that, though, with regard to the S&P 500, we covered this a little bit earlier, but the other thing that must go with it is that we must see a close above the 50-day exponential moving average. So if at day's end, we see a close above what is 43.02 right now, maybe that exponential moving average is going to change by a penny or two out here. But a clear move above or close above 43.03 combined with what we looked at inside the S&P 500 says, yes, it is a top. But the market still may not be ready. The S&P just simply may trade sideways-ish out here, waiting for the NASDAQ, the final piece of the puzzle, to say, okay, I'm done. Sayonara. See you later. But I'm not saying see you later. We'll be back in just a few.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's get to some questions that have come in by email. Don Quixote writes in. He says, hey, Steve, please take a look at these two stocks that are breaking out. Ticker symbols VEEV, and then the second one is ZS, as in Sam. Where do you think they are on the cycles and price objectives, short and intermediate term? Thanks, Don. So the VEEV, Viva Systems, that's an easy one, Don. Take a look at my charts out here. Just simply the daily, the weekly, and the monthly. So take a look at these and tell me where you believe resistance is at. Anyone? You guys have this down so pat. You don't even need me to narrate the charts for you. You're exactly correct. 176.90. 176.90 is the top of the monthly profile. That is the level of resistance that you need price to really get above for this thing to have a giganto breakout. Until then, the move could be open. Now let's go take a look at the daily time frame with my other set of tools, because on the daily and the weekly, price is above the top of the box, so above resistance out there, but inside the monthly, not so fast. And that's why we came up with that figure of 176.90. Now, if we take a look at the daily time frame out here, we can see a bottom back here on March 17th. Wave number 7, letter G. That's a valid bottom. Today is going to be bar number 7 of a TD9 count. On the daily time frame, we know that bars 8, 9, or the bar following 9 could identify a change in trend out there. So knowing that you're up at resistance out here inside of VEEV, it may be getting ready to pull back a bit. Where could it pull back to? Well, 161.02 would not be out of the question. That is Stevie's green line or thereabouts. Now, the beauty on this, I wouldn't exit the trade at this stage here if I were in it, if I'm you. I would have priced this week on Friday closed below 170.35. 170.35 is the breakout level on a weekly time frame. It's not something Stevie wrote in there. It's beautiful. Maybe I shouldn't use it's beautiful. You'll associate it with somebody else who likes to use, just a few number of words out there. But in any event, it is a beautiful thing because it helps you to understand, is price breaking out or not? Now, you got that 170.35 level, but that's not going to be good enough for you. You need to see this, and you need to see a close above the top of that monthly profile out there. If I pull up the monthly profile for you on this, do I have anything that says be careful? That got me back to the weekly. That didn't help. Let's try the monthly now. And the monthly, I don't really have enough data. It shows that price could be setting up for Rhodes momentum indicator, but you need to get a bearish reversal candle, and you don't have that there. So you like the way that this is trading. You like that the way that's trading on the weekly. We gave you the numbers there, and we've given you numbers on the we've given you the numbers out here for the monthly resistance level. Let's try ZS. Let's go see what ZS is. ZS is Z scalar. It's traded above its daily, its weekly, and doesn't have enough data to have a monthly profile out here. So where is this thing headed to? I don't know. Let me pull over my other charts, see if we can figure anything out. Let's take a look at the daily time frame. We don't have any kind of a topping signal at this stage of the game from a daily standpoint. Let me try the weekly out here. The weekly, let me populate it. Here's a beautiful thing. Forms a wave number 7. That's letter G on my screen up at the high. Rhodes momentum indicator. What's price do? Moves all the way back to where it broke out. Close enough. 5-6 weeks ago, 34.21 was the level. Get that big old bullish engulfing candle. Now you should see price begin to pull back here. On a weekly basis, Don, what you've got is Stevie's red line turn green. And when that happens, we typically see price and that line catch up to each other. Now it's over the coming trading sessions. This could take weeks. Could take many weeks for that to occur out there, but it is a phenomena that typically transpires, and that says watch the daily time frame. Although I don't have a topping pattern on the daily out here, and I don't have enough data on the monthly. So what are you going to watch? What can I give you to watch out here? How can we help Don when it comes to this? I think about the only other thing that I can do is just take a look at a retracement level for you. So these would be the areas to watch. This is going to be from its high down to the low out here, the coronavirus low. You're at the 0.618 area. So it's just keep a close eye on it right now. If price can stay above 68.90, Don, you're probably headed up to 78.12, the 0.786 level. So I hope that helps you out. Thanks so much for writing in. Tom G writes in. And Tom writes, let me grab a sip of water. I just dumped all of my J dust from yesterday and was wondering your thoughts about flipping this back to being long the mining equities out there. Also looking to see what your thoughts are on the SPY and oil in general. So we really covered the SPY and the S&P 500, I believe. Let's go take a look at really Goldilocks out here. So if you were short, which you were, and we're going to just simply base your decisions on gold itself, just simply from a directional standpoint out here. So what do we know about Goldilocks? Well, it's a beautiful thing. We see that gold here forms a Rhodes momentum indicator top. We can see that it does this yesterday. Price begins to move down, and it moves down until it does what? Until it tests its breakout area. Where's its breakout area? 1732.40. Is this some kind of number that Stevie put in there? Is this a line that I put in there? Heck no. That's not how we operate here. We operate just totally objectively, just simply by the numbers. If you were short gold, like in this case here, Tom was, but he chose as the vehicle to be short, he chose the miners out here. And if Tom was paying attention to a 30-minute chart, which I'm sure he was, I will bet you that Tom knew where that breakout level was on the 30-minute time frame. And so as soon as price got down to 1732, and it got down there at about 4 o'clock this morning, and maybe he watched it just trade for a little bit and saw that price could not bust through that, he's like, sayonara, baby. Now, you were talking about going ahead and flipping the position to the upside. I say go ahead and do that for your short-term trading. And you exit that position, you jettison that position immediately on a close below 1732.40. My preference would be a 30-minute bar on a really 2 30-minute bars below that. But can I see you switching when taking a look at a short-term time frame chart like the 30-minute and going from short the miners to long the miners? Yeah, of course. Price got down, tested, and it rejected a key level of support. And likewise, you know exactly where that price point is where you would want to say, okay, you know what? I tried that position. It didn't work because you got to close below that. And then at that stage, you could consider flowing back through to the to the other side of the trade. Take a look at a different time frame out here, Tom. Take a look at the 2-hour time frame. What does this do out here? This generates Rhodes Momentum Indicator top. It's a key reversal session that identified the top. Price gets down and tests 1732.40 on its 2-hour time frame out here. Again, now in this case, price really needs to get above Stevie's green line. 2 green lines out here. 1758 is the first one. 1770.60 on any type of counter trend rally out there. So, but at this stage, I see what you're looking at. So no reason for us to spend more time. I don't believe it's any reason for us to spend more time on Goldilocks. Now, well, if there's one reason that we would spend time on it, it is because today is going to be bar number 9 of a TD9 count. And what that does say is that now you've got a valid topping pattern. Bar number 8 is the high. Now, you could see gold make a higher high tomorrow. That would still be a valid pattern. Remember, the high needs to come on bars 8, 9, or the bar following 9. And what this does, so Tom, if in fact you see that level of support fail inside of gold, then you know where gold is headed to. And that would be the 1706 level. But right now you've traded it properly. And you paid attention to your TD9 count breakout level. And that's why you exited that position. And we all now understand why you're taking the opposite of that position. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. To answer Tom's question about light sweet crude, Tom, I wouldn't begin trading light sweet crude until you get a valid bottoming pattern. in it, and I would be waiting for that on the daily time frame. So here we can see price has been pushing lower, doing less relative energy. There's a possibility of getting a hammer candle today. I'm not saying that we're going to. Maybe you don't get a hammer candle today, but maybe get a bullish reversal signal tomorrow. If you do get that, then you've got a valid trade out here, or a valid bottom. And what you would be doing is you'd be looking for price to get back up into about the 28 and change level out there. But right now, I don't see anything when I take a look at short-term time frame charts out here, long-term time frame charts. Here, for example, is a 30-minute chart, and it's got a TD9 count bottom out there. Price would need to close above 2060 in order to say that this was more than just jostling around between support and resistance out here, but I'd really be waiting for the daily time frame to give you the best signal. Last question for the day comes from Hector and the fuel injectors. Hector is looking for an entry into ticker symbol CX. So Hector, you got a gift today, and that gift is you've got a brand new daily profile. Price is trading right at the center, which is 199. It could be an area for you to edge in here. I don't know if I would do that. Your real buy would be at about $1.74, the bottom of that daily profile. It's pretty much equally distributed. That center is pretty close to the center out here. As I pull over my other chart, so we've got $1.74 there. Stevie's red line is $1.78. As far as why did price stop where it did, well, that's an easy thing to understand. All we have to do is turn on our weekly time frame charts, go take a look at where Stevie's red line is, and we can see that is why price stopped where it did. So you know where resistance is at. And in this case here, in order to make this trade worthwhile, I would think from a reward resistance standpoint, let it pull back to the bottom of that daily profile. That should be just above Stevie's red line at the same time. And that would be your opportunity to get into an entry into CX, which is CMEX SAB. Folks, thanks so much for being here. Stay tuned. 2 great hours are left. You've got your favorite polar bear, David White. He's up next. Tom O'Brien to take us on home. And I'll be back with you on Thirsty Thursday. Although I think I'll start Thirsty Thursday on Wednesday. Look out. Take care. Be safe. Have a great day.